next, I have the great pleasure of introducing Sir Ronald Cohen. And he is the chairman of the Global Steering Group for Impact Investment and for the Portland Trust. But he is also very well known as a pioneer in the finance space, really helping to make huge changes in venture capital and, helping to create social impact bonds and much more. So Ronnie, welcome. I'm really excited that you could join us today. It's always a pleasure to speak with you.
Likewise, Adva. Pleasure to be here with you and with all of you on this amazing webinar.
Great. So I wanted to start by asking you a question about an issue that you've been working a lot on recently. And you're someone who's, a big thinker. You believe strongly in the ability of capital markets to change. And you have been spending a lot of time working on this concept of impact-weighted accounting, of looking at how, changing the way financial markets measure performance so that impact and, how they do financially are both measured. So tell us a little bit more about this idea of impact-weighted accounting and, how realistic is it to actually get capital markets to implement it?
So the answer, Adva, is that it is so realistic that it is already happening. If you look at the $30 trillion of ESG funding, they have already tilted the financial scale for companies. The Harvard Business School Impact-Weighted Accounts Initiative, which I'm privileged to chair, and I've just come off a 2-hour meeting with all the people involved in it, has published the environmental damage caused by 1,800 companies across the world. And when you analyze this data, you see that within the same sector, companies which pollute more are worth less relative to their competitors. And I believe that as impact transparency comes through impact-weighted accounts, we're going to see these correlations emphasized, and we're going to see investors beginning to draw correlations with new variables about future growth and future profitability of companies that deliver impact as well as profit. Now, we can measure, and anybody can go, it's open source, to the Harvard Business School IWA, Impact-Weighted Account site, and you can see that we already show how to measure, and we show examples of the operational impact on the environment, which I've just described, but also employment impact, connecting to the conversation that just ended before we began. You can measure diversity. You can measure gender parity or lack of it in terms of pay or other benefits or even advancement. I encourage you all from the last session to go to the Harvard Business School site. You can put monetary values on them. You can take the missing representatives in terms of gender or minorities at different echelons of a company and apply the salaries they would have or wages they would have earned and get a sense of the loss to their community from it. So the answer is, Adva, this is the next frontier, not just for capitalism, but for society. And I believe it is now becoming inevitable because if impact information is price sensitive, then regulators are going to have to mandate transparency.
So you brought up this idea of regulators, and I think obviously this varies by country and by region, but what is the role of regulators? At what point do you have to have additional regulations or government input to sort of force markets to adopt this? Obviously, there may be some leaders who will do it on their own on a voluntary basis, but do we need sort of regulations to require this of everyone for markets to truly change?
So I'll give you an illustration of why regulators have to come in. We've published today the accounts of, or at least we have the accounts, but we've published the environmental damage caused by 1,800 companies, and incidentally, 250 of them across the world deliver more environmental damage than they make in profit in a year, Adva. There are mind-boggling figures in there. These 1,800 companies' figures had been published by the companies. They weren't audited numbers, but 80% of the necessary information had been published. We're about to publish several other hundreds of companies. And the level of information is going to be lower than the 80%. And so you're going to have investors trying to make the investment decisions without having equal information from all the companies involved. So this isn't about regulation bringing increased constraints on the ability of business to operate. This is regulation that brings transparency to investors, to consumers, to employees, and to governments, so they can all make better decisions.
I wanted to ask you a question about the impact of COVID. Obviously, this year has changed a lot of things. And so I'm curious how you've seen COVID shifting some of these conversations around markets. We are seeing sort of an uptick in interest in sustainability and sustainable finance and ESG investing, which we talked about a bit earlier. And so from your perspective, how is COVID accelerating that change? How is it impacting some of those dynamics that were at play before the crisis?
I think it's accelerating, and it will continue to accelerate the change, Adva. The reason is that, first of all, COVID shakes our habits and beliefs and is leading to a lot of questioning of our system and our political system, as well as our economic system, and this opens the door to greater change. But if you think about it, all our governments are going to emerge from this crisis with less resources to spend on increased social issues arising from high levels of unemployment, because governments have had to borrow to try to help individuals and companies through the economic crisis. And so the only way that governments can cope with the challenges that are going to arise as a result of sustained higher unemployment through poverty, greater homelessness, and so on and so forth, is to bring companies and investors to their side to bring solutions to these challenges. Instead, as we've been doing for decades now, companies creating, in their pursuit of profit, huge consequences environmentally and socially, and governments trying to tax us all to try to remedy them.
Ask you a question, because we've been talking about, sort of really big picture issues. And I think one of the concerns from folks in the development community is we see some of this acceleration is that, much of this new investment is happening in the world's richest countries.
Yeah.
And so I'm curious, what mechanisms you think are needed to ensure that these investments have an impact in the world's poorest countries, that the world's poorest countries, that sort of this, development finance isn't left out of this emerging trend in financial markets.
So what impact transparency is going to do, Adva, is lead to businesses being judged. And this will affect their value on the stock exchange, not just on the basis of their profit performance, but also their impact performance. Now, if you think of their product impact performance, the greatest product impact performance will come from beneficial products that help underserved communities. And so one element of the advantage that impact investment is going to bring for emerging markets is that companies that begin to provide products to help communities in emerging markets with more appropriately priced and designed products will see it reflected in their impact-weighted financial accounts. The same will be true for their employment. To the extent that companies are creating jobs in areas of high unemployment and high poverty, as often is the case in emerging countries, that too is going to be reflected in their numbers. And finally, it is going to help emerging markets to somersault through the use of technology some of the environmentally damaging operational models that developed countries have historically followed, because the sale of these products in these countries will bring impact advantages measured in dollar terms or in currency terms to the companies that are supplying them. So I very much hope that the result of impact transparency, of impact accounting, of reflecting impact through financial accounts, will be to direct a greater investment flows and product flows and employment flows to emerging countries.
So to follow up on that, a lot of the sort of, research and information being done at Harvard that you've been a part of is about some of, 1,800 really, really large companies. So when you look at, a small or medium-sized company in an emerging market or a frontier market, how does this apply to them? How do they play on the same field when they don't have the same sort of resources to do the same type of measurement or reporting? How do we create a system that allows them to not be left behind of this evolution?
Well, so first of all, I think coming out of this crisis, the emphasis is going to be on small, medium-sized growth businesses and self-employment in order to absorb the huge number of unemployed back into the workforce. The reason is that an unfortunate consequence of COVID is that big businesses have shed labor, and they've learned to operate on a streamlined basis, and they're going to try to hold on to that. So the incentives have to go to smaller businesses. Now, I think in terms of impact, the employment impact will be easily measured. The product impact may also be quite easily measured. It shouldn't impose a heavy burden on a small business to prepare impact-weighted financial accounts. And just as we have slimmed down financial accounts, then we will have slimmed down impact-weighted financial accounts for smaller businesses.
Great. Well, Ronnie, thank you so much for your time, and looking forward to seeing how this evolves and how it's picked up by financial markets moving forward. Such a pleasure to have you with us today.
Fantastic. Thank you very much, Adva.